Good evening, everyone. Once again, welcome to our session on standard costing. Today, we will be covering fixed overhead variance. All right, fixed overhead variance. Now, before we move on to fixed overhead variance, it is important to understand some concepts. Okay, then we'll move on to the variance part of it. Give me a minute. Hope you can hear me well. Voice is audible. Please respond. I want complete attention today. Okay, full focus. Everyone with me, right? Just full focus.
Yes, sir.
Be on mute.
Yes, sir.
It's a slightly different from what we have covered so far, the variances. So I request at most concentration for next 15 to 20 minutes. It's very simple, nothing complicated, but you need to understand the concept. Okay. All right. So we said fixed overhead variances. Now, even before we move on to fixed overhead variances, let us try to understand what is fixed overhead. Okay. What is fixed overhead according to you? What is fixed overhead?
The expenses which are fixed.
Expenses which are fixed. Correct. Technically correct. Now, what I will do is probably to go a little more deeper into it. This is little more deep dive into a manufacturing segment is critical to understand specifically what is fixed overhead. Okay. So then once we explain this concept, the overall, you need to understand probably some of you of the previous batch rejoined or for them, it may be slightly duplication, but please bear with me. You need to understand the different elements of cost, and under elements of cost, fixed overhead is one of the element. All right. So let us look at this helicopter manufacturing segment. This is how a helicopter manufacturing assembly unit looks like. Now, what are the possible costs will be incurring in this manufacturing? Let us be very specific to manufacturing here. We are not discussing about, I would say, the overall expenses, overall expenses. We are focusing more on the manufacturing side of it. What are the possible expenditure? You can volunteer yourself. What are the possible expenditure according to you?
Rent.
Rent. Okay, let us be very specific. Rent of factory building. Okay.
Electricity.
Electricity.
Machinery.
Electricity. Machinery, because it is okay. So for I will put it as, because machine is basically an asset. So can I put it as depreciation on machine?
Yes.
Okay. What else?
Property taxes.
Property taxes. Okay. Property taxes of machine factory building.
Wages.
Taxes of factory building, because I'm not discussing here again non-manufacturing. So property taxes of factory building. Yeah. Then
Salaries.
Salaries and wages.
salaries and wages. Correct. So it is, I will call it as, when we say salaries, when it comes to manufacturing segment, we call it by the name labor. What is that?
Labor and wages.
Labor. Yeah.
Labor, wages, labor, all these things are correct. Okay. Now, labor, for a moment, I will put it as in two places. I'm just putting it two differentiation. I'm just for parking it. Labor, I'll explain it later. Okay. I put labor under two categories. I put it. What else?
Insurance of factory.
Insurance of factory. Correct. You are missing many major expenses.
Maintenance.
Maintenance. Okay. Of factory building.
Raw materials.
Most important. Correct. Without raw material, what manufacturing? Correct. Here also materials, what I will do is I will put it in two places. I'll explain about that. What else?
Fuel of machinery.
Which one? Come back again.
Fuel.
Fuel. Good. Fuel. What else?
Legal expenses.
Legal in factory building, it more of an administrative building expenses mostly, right? It cannot be a manufacturing related unless it is specific to manufacturing something. So let us think that is for a moment, it is administrative expense. What else? So focusing about manufacturing here. Which one?
Transportation.
Transportation, correct? Transportation of what?
Raw materials.
Okay, so I'll put it as generally it is added along with your material, okay, which is called as carriage inward. Okay, what else? Which one? Sorry, which one?
Human resource.
Human resource, generally it comes, if the HR, it can be a separate category of expenses, correct? Administrative expenses. Now this is good
Yes.
enough. Yeah, tell me. No problem. So if you look at, I could get what I was looking for. Okay. So when you look at the first category of expenditure, I put it in one side. It can be materials, which can be also called as direct material. When it comes to raw materials per se, we will call it as direct materials. Okay. What is it called?
Direct material.
Why? Yeah, please respond. Why it is called as direct material? What must be the reason? It is called as direct material. Why it is called as direct materials?
It should be the main object for carrying out the output.
So if you look at, you can see helicopter here, correct? Are you able to see our aircraft here? Some of the aircrafts. So let us, if you look at some of the aircrafts have, let's say, composite material. It is like a steel. It is a different material which is used in aircraft production. We can call it as composite material. That is nothing but the raw material used in manufacturing of that aircraft. Like that, there may be multiple components relating to manufacture. So whatever which can be directly visible in production, directly attributable to the production. Are you getting me? Directly forming part of my final output. That product is called as direct materials. Are you getting what I'm trying to say, guys? Everyone, please respond. Keep responding. Raw material is nothing but the product which forms part of your production, which is very visible in the product, and it is inevitable for the production. That we call it as direct material. Example is steel, composite material, anything relating to which is being used in the production, which is clear. Everyone with me?
Yes,
Now,
sir.
in this direct material, so let us look at for a moment in a factory premises. You can see, it's a very big factory building. It is one of the aircrafts. You can see like that thousands of production may be happening. How we track as a accountant, as a cost accountant, how we are going to track this material is critical. How we track this material? What is the basis? How we can track it? Normally, what happens is, let's say this particular aircraft, what you are seeing here, let's assume it is Boeing 747. Okay. Now, this aircraft in shop floor for production, the production manager requires, let's say, 100 kg of steel on a particular day. Let's say 19th of May, 100 kg of material is required. What he will do is, he will make a requisition. He will make a requisition to the stores department. To the stores department, he will make a requisition that I require 100 kg of raw material steel for my production of Boeing 747 batch 1. So he makes a requisition. Nowadays, everything in ERP. But conventionally, how it used to happen is, it makes in triplicate copy. He make a requisition in triplicate copy. One copy will be maintained by him. The second copy will be kept in the stores department as a record. And the third copy will be going to your cost accountant. The cost, because he has to track how much of material used, how much is, all these controls he needs to have. So what he does is, the moment the cost department gets his material ledger, material issue details, he will have a cost ledger in which he will mention that, okay, Boeing 747 project, against that, 100 kg of material has been used on 19th May, and he will have a control on the total material of steel used against that. Are you getting what I am trying to say, guys? Everyone, girls?
Yes, sir.
With me? Okay, please respond. Okay. Now, why I am highlighting that? Any point of time, anybody asking for, particularly from chairman level, director level, they will be asking, what is the material cost? What is the labor cost? All these information. So any point of time, you ask what is the material consumed, it will be readily available with the cost accounting department, and they will be able to pass on the information. Are you getting what I'm trying to say? Because there will be it is directly attributable to the project. It is directly incurred for Boeing 747 project, and it is directly accounted as well. So that is the reason why it is called as direct materials. Everyone understood that point?
Yes, sir.
Yes,
Directly attributable. Remember, steel in production or composite material in production of aircraft, wherein it being sought by the production manager, steel's stores department issuing 3 copies, material comes to production floor, cost accountant enters that 19th May, 100 kg. He enters in that. There will be a direct control will be there. It will directly attributable to the project, and any moment of time you need any data, you will be able to ascertain. Remember, always remember, that is why it is called as direct materials. Now comes to the next part. Direct labor. Again, when this assignment happens, there will be thousands and 10,000s of people will be shop floor people will be there. So there will be a supervisor. What he does is, okay, today these 10 people will work on Boeing 747 project. Today, this 15 people will work on Boeing 747 batch 2. There will be an assignment happens between for all these 10,000 people into multiple projects. They will be working in different projects. Again, the shop floor person will be sending 1 copy of this labor assignment to HR department, 1 copy with him, and 3rd to the cost accounting department. And the cost accountant, again, what he does, okay, 10 persons working on Boeing 747 project. 10 people are working on Boeing 747 project. He will be accounting. Okay, 10 people from this day to this day, it will be assigned on 747. In other words, these people are directly attributable to a specific project and accounted directly into that project. Are you getting what I'm trying to say, guys? Girls, are you getting?
Yes, sir.
Directly attributable. If you are not getting anything, just post me and ask question. I may not be seeing the chat. So post me and ask question. So direct material is nothing but which is directly attributable to production. Example, steel, composite material directly goes into your production, and the cost accountant can directly enter against the project, and any given point of time you will get the data. Similarly, direct labor, specific people, 10 people will be assigned to 747. The cost accountant will have the data. He will be accounting, okay, this many people, this rate, there will be a labor rate is being assigned for Boeing 747. So somebody asking any point of time, what is direct labor attributable to Boeing 747? In fraction of a moment, they will be able to give it. You're getting what I'm trying to say, guys?
Yes, sir.
Good. Keep responding, okay? Now, the third category is nothing but fuel, or I would call it as trial runs. If it is helicopter, we'll call it as trial runs, aircraft trial runs, or some other name is I forgot. See, nothing but just ensure that they are ready for getting into the next production phase. What we do is fuel is required, directly required for running the aircraft. Test runs, we can call it as test runs.
Direct expenses, sir.
That is called as, it is not direct material, it is directly attributable to project. It is directly attributable to 747 project. However, it is not material. These are not material, neither labor, but it is assigned specific to project. So we call it as direct expenses. You understand? It is specific to project. So we call it as direct expenses. Are you getting what I'm trying to say, guys? Everyone?
Yes, sir.
So three things we explained. One is direct material, very clear. Assigned to the project, attributable to the project, specific. Second is direct labor. Assigned to the project, attributable to the project, and we can identify any given point of time, specific. Okay, but 10 people assigned to 747. Remember this, visualize that. Third is test runs, specific to projects, or fuel, specific to project. We call it as direct expense because it is directly attributable. That is the reason. Now, you have mentioned another 10 expenses. There may be, you imagine a situation, 10,000 people working, acres of factory, it is not just 10 expenses. There may be any sort of expenses other than direct material, direct labor, and direct expense. You're getting what I'm saying? Which we call it as manufacturing overheads, because we are discussing about manufacturing only. So we call it as manufacturing overheads. Any expenditure other than direct material, direct labor, direct expense relating to production we incur, we call it as manufacturing overhead. Do you understand, guys? Everyone?
Yes, sir.
Clear on that? Any expenditure for manufacturing other than material, other than labor, other than direct expense, other than direct material, other than direct labor, other than direct expense, we call it as manufacturing overhead, which includes rent, electricity, depreciation, property tax, insurance of factory, maintenance, whatnot, everything. Even to the extent you distributed Diwali sweets in the factory building. That is for the, motivation of employees in the factory. That is relating to, factory expenses. That will be attributable. So any expenses in that nature will be covered in that. Getting? Now, if you look at, let me come to the next point. In this also there is a labor. In this also there is a material. Why I put it this labor and material here? What must be the reason?
Maybe indirect, sir.
Very good. It is nothing but indirect labor. Let me explain what is indirect labor. See, there may be, I told you, 10 people being assigned to project 747. To assign these people, 10 people to 747, there may be a supervisor. There may be a supervisor who will be assigning this 10 people to a project. That supervisor is not specific to any project. You understand what I'm saying? He is not specific to any project. He supports all the projects. He assigns people. So where we will put it? We will put it under manufacturing overhead. You're getting what I'm saying? Person is not specific to project. That person is not specific to project, but he assigns people to project. So we call it as indirect labor because it is not direct. It is not directly attributable. His contribution is there for all the project. That is the reason. Everyone with me?
Yes, sir.
Similarly, there is some materials, nothing but indirect materials we can call it, which is nothing but if you look at, there may be, let's say, I'll give you some cleaning clothes. Okay. They purchase in bulk. Why they purchase in bulk? Which can be used for any helicopters. It is not directly, or glouses, for factory, or the helmets required. All these things are not specific to any project, but is required for overall project. So we call it as indirect materials, not specific to project. It is not specific to any project, but is required for manufacturing. Material in nature, we call it as indirect materials. Everyone with me up to now? Any questions, please ask me. Then only we go to the next point.
It is clear.
Once again, anybody, any questions? Please confirm. I'm not getting confirmation from you guys. It's very critical because then only I have to go by phase. Please confirm quickly. I should get 41, 42 chats. All right. Now, so you understood direct material, direct labor, direct expense, and manufacturing overhead. Under manufacturing overhead, we have explained already about variable manufacturing overhead. So there are two categories. One is variable manufacturing overhead and fixed manufacturing overhead. Variable manufacturing overhead, if I give an example, let's say factory maintenance, okay, which is, let's assume that, which is, or let's variable, not that. Let me give some other example. Variable manufacturing overhead is, let's say, indirect material, the gloves which I purchase, okay. So if there is 1,000 production happen, the manager will have an idea, okay, if 1,000 production run is happening in a month, I need to purchase probably 2,000 gloves I need to purchase. If there are 10,000 production runs happening, he will be proportionately increasing that particular usage of those gloves, or probably even for that matter, indirect labor, okay, supervisor. For 1,000 production run, maybe only one required. But when it becomes 2,000, you need two supervisors. You understood? So it varies in line with the proportion of the production, which we call it as variable manufacturing. It is in line with the production. Are you getting? It is in line with the production. Now, but there may be some other expenditure. Let's say factory premises, building. Okay, the factory, that hangar, what you're seeing. You have taken on rent the entire hangar. Probably only 10% of it may be utilized, or whether you know 90%, you have to incur the or pay the rent. You're getting? You have to pay the rent. And if you're paying the rent, what happens? You have to pay the rent. It is nothing but fixed in nature. Are you able to differentiate? One is variable in nature, which changes with level of activity, and another is fixed in nature. Got it, everyone? Is it clear? Please confirm.
Yes, sir.
Yeah. Be attentive. Quickly be attentive. Very, very important points we are discussing. Phased manner we are going. So what I was trying to say until now, in a factory manufacturing environment, if you look at, there may be direct material. You understand what is direct material, direct labor, direct expense, and then there is a bunch of expenditure, whole lot of expenditure other than direct material, direct labor, direct expense, we call by the name manufacturing overhead. It includes all the lot of expenditure. We call by the name manufacturing overhead. Getting everyone? It is called as manufacturing overhead. That is what? Manufacturing overhead. Under that, there is a category called variable manufacturing overhead, which changes in line with the production. Example is gloves or related things, which changes with the level of production. But there may be a category of expenditure which is fixed in nature. Example is rent. Fixed manufacturing overhead. Now, if you come back, what I was telling is fixed overhead variance is what we are trying to explain about it. Fixed overhead variance. So far, the variances, if you look at, we discussed about material, labor, variable overhead, and sales variances we discussed. Now we are going to discuss about fixed manufacturing overhead variances. Now, before you understand, or before we go into fixed manufacturing overhead, you need to understand what is fixed overhead. That is why I explained all these things until now. I hope you got a clarity about what is fixed overhead. Fixed manufacturing overhead, everyone. That is very important before we move on to variances. That was the whole point with which we explained the entire thing. Okay. Now, I have a question back. I said direct material. The chairman is asking, what is the direct material for project 747? Immediately, the cost accountant can give. Direct labor, immediately in a fraction of a moment, direct labor, the cost accountant can give the details. Direct expenses also immediately can be effective and identify and given. How about manufacturing overhead? How about manufacturing overhead? Somebody asking, director level, somebody asking. Immediately, will he be able to give the data? What do you think? What is your thoughts? I explained earlier, when the information relating to direct material goes to cost accountant, he records it against the project. Direct labor against the project. Direct expense against the project. Factory overhead, manufacturing factory overhead, fixed manufacturing overhead. How we account that? What we do? Will he be able to identify immediately? You understand the question, right? You need to understand there are 10,000 people working, acres of factory, whole lot of expenditure incurring, not specific to project. Will he be able to identify the exact amount, what is happening, overhead, what is happening in a particular time? Will we be able to ascertain, like material or labor or expenses? Please respond.
We need to calculate first.
How we calculate?
Divide the whole.
No, my question is, we'll not come to the calculation. My question is it ascertainable readily? That is my question. Direct
No.
material, I said, immediately ascertainable. Labor ascertainable. Fuel ascertainable. Because immediately specific to projects. But overhead is for all, the across factory, for 10,000 people. Will we be able to calculate immediately?
No.
Everyone agree with that point?
Yes, sir.
Others?
Yes, sir.
Others are watching a movie, I think. No response. Correct. Okay. So how we do that? Particularly, let's say May, 31st May, you need to account what is the overhead incurred. There is some way you have to calculate and put it in books. See, initially, now I am coming to the core point. Initially, even before we start the project, we would have identified something called budgeted fixed manufacturing overhead. You understand what is this budgeted fixed manufacturing overhead? That is even before production. In fact, this is what I mentioned when we started the standard costing itself. There will be a budgeting exercise. You know, the Boeing, which is company, Bosch company will send all the details to them one after another. You know, you remember. So from that perspective, there will be a budgeted fixed manufacturing would have been estimated 6 months back itself. That is different. I am not discussing about that. Finally, at the end of the period, maybe 31st March, there may be an actual manufacturing overhead also.
31st March.
No, financial year end. I am saying financial year end, we will ascertain the whole total, we will calculate. That is also there. So budgeted 6 months prior we have. Actual also at the end of the year, we will identify. These 2 points are clear. How about interim period? Interim period, how we calculate? Means, let's say May 31st, I have to close the books. I need fixed manufacturing overhead. What will I do? I have to close the books, correct? I cannot ignore this also. How can I do
On
it?
the basis of progress.
Okay. Okay, good. So here, budgeted manufacturing overhead is nothing but, I'll put it here. Budgeted, let's say, quantity or budgeted level of activity. Level of activity, budgeted, how we identify budgeted fixed manufacturing overhead is budgeted level of activity multiplied with budgeted rate. This is how we calculated the budgeted fixed manufacturing overhead, which is nothing but we'll identify, okay, if it is 10,000 is sales, budgeted, into rate of overhead, maybe 100, 10,000 into 100. That is how we identify. Actual is nothing but actual expenses, sheer actual expenditure. How much you spend is about actual. Now for the interim period, what we do is manufacturing overhead absorbed. We will call by the term absorbed overhead, which is not a reality. We can call it is a myth. It is not a reality. What we do is, listen carefully, very, very critical, very, very critical. Listen carefully. Here we are not going to ascertain the actual at this moment. 31st May, we cannot ascertain because the expenditure are so wide, so spread, we cannot identify. What we do is, we will consider what is actual level of activity multiplied with budgeted rate. Actual level of activity multiplied with budgeted rate. In effect, if you look at budgeted rate remains same. Instead of budgeted level of activity, we consider here actual level of activity. So that for the interim period, if it is 31st May, we identify some numbers to close my books, which is closer to actual. It may not be actual, but somewhere closer, because I know what is my actual level of activity. I applied rate and I derived that. You are getting what I'm trying to say, everyone?
Yes, sir.
Everyone with me? Hope it's clear. Up to now. I repeat once again, listen carefully. There will be something called budgeted fixed manufacturing overhead, which we identify at the beginning of the period, even before we start production. Then second is, at the end of the period, you will have some actual manufacturing overhead, which is also existing. In between, to close the books interim, what we do is we identify something called absorbed overhead, which is nothing but actual level of activity into budgeted rate. We derive this absorbed overhead. So for a moment, let us assume that 100 is my budgeted I made. 110 is, let's say 95 is my absorbed overhead. Actual overhead become 105. Okay. Now, once you do this, at the end of the period, the actual become 105. Whereas until that time, what is absorbed? It was only to the extent of 95. So if you notice, there is a difference of 10 between absorbed versus actual. Everyone agree with me? So what we do not rectify absorbed overhead. We do not rectify whatever is absorbed. We will pass corresponding entries compared to actual and make the difference passing entries to make it matching with actual. So if you look at in this scenario, my actual is more, absorbed is less, absorption is less. So we call by it by under absorption. Absorption is less, which is nothing but under absorption. So we will pass corresponding entry for that under absorption to the extent of 10 so that it will match to my actual 105. Similarly, for a moment, assume that this is 110. Absorbed, we put it as 110. Actual is only 105. So what we do here, absorption is 110, actual is 105. So in effect, we can say that absorption is more. My absorption is more compared to actual. So we call it as over absorbed compared to actual. We pass corresponding entries to make it to actual. Is that clear, everyone? Up to now?
Yes, sir.
Any questions up to now? Please respond yes, no. So we discussed about budgeted fixed manufacturing at the beginning of the period, even before the operation starts. We discussed about actual at the end of the period. In between, to close accounts, we call something called absorbed, which is nothing but actual level of activity into budgeted rate. We call it as absorbed overhead. Please respond. I'm not getting chats from 19 to 20 people. Please. This is very critical. I need to get the confidence that you are clear. Please respond. And if any questions, please ask so that we can go to variance. Kindly respond. This is very critical. You need to respond, guys. That gives me confidence that yes, it's clear. I can go to the next step. It has to be in a phased manner. I have to bring you to variance. I cannot go directly to variance. That's why I insist. So first we discussed the factory environment and we understood what is direct material, direct labor, direct expenses. Then we came to the manufacturing overhead. We discussed about variable and fixed. Then we come specific to fixed manufacturing overhead. Specific to fixed manufacturing overhead, wherein we said there would have been a budgeted even before the production. There would have been an actual at the end of the period. In between, we derived something called myth, called as absorbed overhead. And then we discussed about under absorption and over absorption also. Up to now, everyone clear? Any questions? Okay, good, very good. Now, let's go to this. So if you look at this table, this is what I discussed about elements of cost. Direct material, you are clear. Direct labor, you are clear. Direct expense, you are clear. Factory overhead variable, clear. Factory overhead fixed is also clear. And we discussed about budgeted factory overhead is nothing but budgeted rate with budgeted level of activity, clear. Absorbed overhead is clear, budgeted rate with actual level of activity, and actual overhead is also clear. Up to now, everything is clear. So from an overhead perspective, fixed manufacturing overhead, when we discuss, unlike the earlier master chart, if you remember earlier, we have a different master chart altogether. We had a master chart where we discussed standard quantity, standard and actual, standard quantity for actual output, rate, we discuss actual quantity, actual rate, everything. You remember that master chart. Whereas when it comes to fixed overhead, it is completely different. For all other variances, we apply the same rationale. Material, labor, variable overhead, sales, we approach through that master chart. When it comes to fixed overhead, all you need to remember these three equations. Total fixed overhead variances, fixed overhead spending variance, and fixed overhead production volume variance. These three equations you should remember. And to calculate that, here the master chart is nothing but you will calculate these three elements. You will just calculate these three elements. What is my budgeted fixed overhead? What is my absorbed overhead? And what is my actual overhead? And once you identify these three elements, you can resolve these three with equations. Total fixed overhead variance is nothing but actual fixed overhead incurred minus fixed overhead applied. Applied, we have already know, you know what it is. Actually, you know what it is. Fixed overhead spending is nothing but actual fixed overhead incurred minus budgeted fixed overhead. Budgeted, you know what it is. Actually, you know what it is. Fixed overhead production volume variance is nothing but budgeted fixed overhead minus fixed overhead applied. Here also you know it. Budgeted is also clear. Applied is also clear. I hope it's clear, everyone, up to now. So here the master chart is nothing but you will just calculate budgeted fixed overhead, absorbed overhead, and actual overhead. And once you identify, you apply on this equation. Take a screenshot of these equations, please. Everyone taken? So these three equations you need to apply and fixed overhead variances are completed. Any questions up to now? So first we understood what is manufacturing fixed overhead. Then we came to variances. All we need to identify is actual fixed overhead, budgeted fixed overhead, and applied fixed overhead. And the moment you identify, these three equations can be resolved. So these are the equations I told you. Okay. Can we try this question, everyone? Simple question. Fixed overhead budget is there. Fixed overhead absorbed is there. Actual fixed overhead is there. Please find out fixed overhead spending, volume, and total variance. Just try it out. Take a screenshot and try it out. I have not told one thing, which I will explain once you do this. Please try it out.
Sir, could you please share the screen again? Yeah, thank you. Done.
Please post the answer. I don't think it's complicated. Applied and absorbed is same. Quickly do it. What is the complication here? All you need to do is know the formula. That's it. Is it so complicated? Quickly do it. Mark the formula also for your convenience. Do it. You should have a question. And I'm expecting a question back to me. I'm expecting a question back. You are not asking. What is that question? You should have a question.
Actual overhead incurred.
Actual overhead incurred is I have given actual fixed overhead. Fixed overhead absorbed is there. Fixed overhead budget is also there. But you should have one another question. What is that question?
Fixed overhead applied.
Which one?
Fixed overhead applied.
Applied is nothing but absorbed, applied, everything is same. No problem.
So total fixed overhead is addition of both spending and volume variance.
That's correct. That is not the question. That is correct, but that is not the question. There is another question should come to your mind.
So favorable or unfavorable? How
Very
to find
good. How you calculate favorable and unfavorable? You should know now. When you have something called absorbed, other things are okay. Budgeted and actual, you can write it, no problem. But when it comes to absorb, how will you calculate? That's a question. Now here, look at, I will explain this question. Then I will explain the concept of absorbed also. Okay, absorb, I mean, favorable or unfavorable. First, let me take fixed overhead spending variance. Okay, what is the equation for spending? Actual fixed overhead incurred, which is 90,000, minus budgeted fixed overhead, how much? 1 lakh.
1 lakh.
So it become 10,000. I have
1,000.
budgeted 10,000, I 1 lakh, but I have incurred 90,000. Favorable or unfavorable?
Favorable.
Everyone with me?
Favorable.
That is no doubts. It is, I have budgeted 1 lakh, but incurred 90,000, 10,000 is favorable, no doubts. That is clear. Now the question is different. When we come to the next one, mute, kindly mute. When it comes to the next one, okay, if we look at what happens here, budgeted fixed overhead production, volume variance is nothing but budgeted minus fixed overhead applied. So one is budgeted, another is applied. Applied, we do not know how to take the approach. Now, listen extremely careful, okay? Applied, what is the equation we used for absorbed or applied? We mentioned that actual level of activity multiplied with
The budget rate.
standard rate. Am I correct?
Yes.
Now, actual level of activity, okay? So here the concept goes like this. If my actual level of activity is more, which means, or otherwise, if my absorption is more, in this case, if my absorption is more, which means that, let me write it here. If absorption is more, which means that if my absorbed overhead is more, which can happen only if my actual level of activity is more. Everyone agree with me? Absorption. So in effect, if I say, let's say actual level of activity for a movement, for calculation, let's say it is 1,000 into rate is 100. Now on the other side, next scenario, if it is 1,100 into 100. So here 1,000 into 100, I get 1 lakh. But when it becomes 1,100 into 100, which is nothing but when my actual level of activity is more, my absorption becomes more. Everyone agree with me? You're getting what I'm trying to say?
Yes, sir.
So the more my absorption, which means that more is my production or sales. You understand? My production actual level is more. When absorption is more, nothing but actual level of activity is more. You understand that point? Everyone, please respond. If absorption is more, which effectively means that my actual level of activity is more. If actual level of activity is more, suppose my production and sale is more, what happened to my profitability? If production and sale is more, what happened to profitability?
It will boost.
Profitability?
Will increase.
Absolutely. In effect, if absorption is more, I can say my profitability will be more because my actual level of activity is less. On the other side, if absorption is less, my actual level of activity will be less and
Profitability decrease.
profitability decreases. You getting what I'm trying to say? So if profitability decreases, if absorption is less, profitability decrease, it is favorable or unfavorable for business?
Unfavorable.
Unfavorable.
Unfavorable. If profitability, if absorption is more, profitability is more, it is favorable or unfavorable?
Favorable.
Favorable. Now come back here. What is my budgeted overhead? 1 lakh. What is absorption? 1,10,000. Absorption is more, so it become absorption is more, it become favorable. Everyone with me? Clear on that point? Now comes to actual total fixed overhead variance. What it is? Actual is how much? 90,000. Absorption is how much? 1,10,000. How much it become?
20,000.
Absorption is more means
Favorable.
you understood? Just spend 1 minute on this question. Spend 1 minute on this question. All of you spend 1 minute. Ask me if any question. Otherwise, confirm that it is clear. I need 40 responses, please. All we did here is fixed. We identify what is budgeted, what is absorbed, what is actual we identify. We apply that to equation. What is spending, what is production volume. And the difference is only point when it become budgeted and actual, which is very clear. Whichever is actual is less means it become profit beneficial because cost is less. We identified that. But when it comes to absorption is involved, we say that for that we mentioned a concept. If absorption is more, actual level of activity is more, profitability is more. If absorption is less, actual level of activity is less, profitability is less. We explained that. Please respond. I need 40 chats. If there is any doubt, pose and answer question. You can ask the question. I may not be seeing the chat. So ask the question if you have anything. Otherwise, I assume I need the confirmation from you that it is clear. 9 more people to respond. Please respond so that I am clear. Please respond. 4 more persons to respond. Please respond. Four more people not responded. What is stopping you to respond? I'm surprised. Okay, thank you. Now, what I need here is, let me summarize what we discussed today. Okay. We started our discussion with this particular helicopter manufacturing segment. We said what is direct material, which is directly attributable. We were coming to what is fixed overhead concept. What is fixed overhead, you need to understand. So we explained about direct material like steel, directly attributable, direct labor, 10 people to a project particular, we called as direct labor. We discussed about direct expenses, which is nothing but fuel or trial runs, which is again directly attributable to production. Then we discussed there may be a whole lot of expenditure which cannot be directly attributable, which cannot be identified against a project. It is all lot of expenditure. So we call it as overheads, manufacturing overhead. Under that, there is variable and fixed, which is directly variable, directly relating to production. We call it as variable, which is directly relating to or not directly related. We call it as fixed. Example is rent. So we understand what is fixed manufacturing overhead. That is what is our first milestone. Then we explained about under fixed manufacturing, there may be something called budget, which is initially set. Also, there may be something called actual, which is subsequently happened. In between, there may be something called as absorb, which is nothing but we can call it as we identify, because we interim period we need to identify with a budgeted rate we apply with actual level of activity. What is our actual production level? We identified in line with that. So we identify something called absorb. Also, we explained we will not change the absorb to completely make to actual. We pass the corresponding entries. Absorb to the extent. So that is where the concept of under absorption and over absorption comes, which we explained. Subsequent to that, we came to variances. We said 3 variances. You need to identify what is spending, what is production volume, and then total of that become total fixed overhead variance. 3 equations you need to remember. Spending is nothing but actual minus budgeted. Production volume is nothing but budgeted minus applied. So actual minus budget and budgeted minus applied. Then the total is nothing but actual minus applied. So you will be able to calculate with whatever the approach what we taken. You will be able to identify. We given an example. Budgeted is 1 lakh. 1,10,000 is absorbed and actual is 90,000. We identify what is spending variance, which is nothing but actual minus budget. 90,000 minus 1 lakh, 10,000 we get. Favorable or unfavorable, because actual is less, we call it as favorable. The second one, when we came to volume, we said budgeted minus applied. Here we discuss 1 lakh minus 1,10,000. Here, whether it is a favorable or unfavorable, how we calculate, because applied means if absorption is more, which means my actual level production is more and profitability will be more. So if absorption is more, it will be favorable. If absorption is less, we'll call it as unfavorable. So here we discuss because absorption is more, we call it as favorable. Similarly, when it comes to total fixed overhead variances, it is actual minus fixed overhead applied, wherein it is 90,000 minus 1 lakh, 20,000 becomes favorable. I hope it is clear, everyone.
Yes, sir.
Good. Now, what I will do is, tomorrow also we will keep a session. Please bear with me. Mostly, I will confirm by tomorrow afternoon or evening. We'll continue with fixed overhead directly with the questions so that we finish it off without much challenges. Fixed overhead will be completely covered. Okay. But I need one favor from you. You need to go through whatever I explain. And any of your friends has not joined today, please pass on this information. This is very important. 1 hour we were in a, it was like a very focused session. Everyone, thank you for your cooperation. It was well, we could go through and I could sense that all of you are clear. But please, you have to go through the recording before tomorrow's session. Also ask your friends also to attend this, go through the recording before tomorrow's session. All right, I will confirm by evening tomorrow's session.
Sir,
Right?
tomorrow I couldn't attend. I am traveling.
Just see if you can join through mobile, if at all possible.
Okay.
Sir, I have a question where can I get the question bank for practicing all these, questions like for standard costing?
Okay, so there is something called Hawk Mail. You would have got it. If you have not got it, connect with Nafia or James. They will help you out on it.
Okay, means
So what I suggest is, if it is offline related to non-academics, what we could do is we can connect offline, Manisha. You can send me a mail. Vinod@Mylogic. I'll immediately, or WhatsApp me. You have my number as well. WhatsApp me. Any concern, WhatsApp me.
yeah, sure. Okay.
Okay, because I don't want to, this is a recorded session, no? So that's the reason.
Okay. Sorry for that.
No problem. You can always feel free. You just WhatsApp me. I'll connect and help you out. Okay.
Sure, sir. Thank you so much.
Thank you so much. Thank you everyone for the cooperation. We shall connect tomorrow mostly. Okay. Good night.